Greetings and salutations, Edwin here, and I'm ready to discuss a thrilling topic that could alter the destination of your future. I'm talking, of course, about home insurance. Now, before we dive in, please remember and keep in mind, yes, I am a licensed insurance agent, but I'm not your licensed insurance agent, and I'm a guy on YouTube. So please contact your local insurance agent to help with your specific needs. Also, please be kind and rewind, or if you don't have a VCR, at least hit the like and subscribe button down below. Okay, so where were we? Home insurance. Today, let's go over what it is, what it covers, and give you some talking points so that you're not so lost in conversation when the topic comes up. Home insurance is a type of policy that provides financial protection for your home, the features of the property, your stuff inside, and some legal protection in the event that you need it. For many people, the home is going to be the largest asset that they purchase in their entire lifetime. So with insurance in mind, it's nice to have some level of protection so that in the event that you get a leak in your roof or the whole thing blows down, that you don't have a financial loss in addition to the physical loss in trying to find a place to live. Because in the event that something goes wrong with your home, the expenses on repairs or replacements can run up to thousands, tens of thousands, even worst case scenario, hundreds of thousands of dollars, if not millions, depending on how big your house is. Home insurance can provide coverage that protects you in the event of storm damage, fire damage, theft damage, water leaks, and a slew of other items that will be written in the legal jargon that is your insurance policy. And speaking of legal jargon, it would be amazing if insurance policies just gave you photos of things that could happen to your house and they could say it's either covered or not covered. But unfortunately, they don't function that way. They send you a nice long policy document of legal terminology so that in the event that something were to happen, it could be interpreted by law for a claim. So what we're going to do today is we're going to list off the insurance terms, the coverage items that usually are listed on your home insurance policy. I'm going to do my best to simplify what each of these terms are and the best way that you can understand them so that when you receive an estimate, when you're getting quotes, or when you're actually looking over your policy, you're not so lost at all the dollar amounts and all the terminology that's being listed. So let's dive right in. The first one, super easy, self-explanatory. It's the word dwelling. That just means your house. That's a fancy way of saying your home. A dwelling is a place where you dwell or a place where you live. So it's just the home. The next item is what's called other structures. This is referring to features that are a part of the property but may not be connected to the house. So think the fence that goes around your yard, think a detached garage, or an attached garage might be part of the dwelling coverage because it's a part of the home. A detached garage is a separate structure, so it's going to be another structure. A tool shed that's not connected, an in-law suite, a swimming pool that might have some distance to it. Again, same concept as the garage. If it's attached, it could be a part of the dwelling. If it's detached, it's part of the other structure. Some insurance companies have some technicalities about how a swimming pool is covered, among other things. So please remember, this is general information that your actual policy and insurance company and your agent can help clarify for you. Up next, we have personal property. This is just referring to the stuff you own in the house. This can be big items, think entertainment centers, appliances, furniture, or it could be smaller items, clothing, bed linens, wedding photos. Yes, items of sentimental value, though you could not take them to a store and sell them online or pawn them. Yes, there is a financial loss to your sentimental value, and there will be a dollar amount applied for that. The next item that you'll see is an item called loss of use. That's a reimbursement option, In the event that you have to leave your home, the loss of the use of your home for you to go stay in an apartment or a hotel, chances are you still have a mortgage. So your mortgage company is still going to expect you to make your payment. But now you have to come up with a place for yourself to stay and maybe your family to stay with you while your home's being repaired. So your hotel stay, your apartment stay, the policy is designed to provide an amount of reimbursement coverage for those expenses. Next up, we have liability and we have medical payments. And I list these together. I personally wish these were flipped around on the policy, but they usually show up in that order between liability first and then medical payments. So liability is in the event that you are taken to court and a lawsuit is filed against you for something that you did wrong on your property. Your policy will pay up to a certain amount to help settle the case with whoever it is that's trying to sue you. Medical payment coverage is intended for someone to collect medical payment for an injury that occurs to them while they're on your property. This applies to someone who doesn't live inside the home and is injured on your property. Best example I have for this is in the event that somebody trips over a water hose in your front yard and they say that it's because you left the water hose out in your front yard. In a case like this, the medical payments coverage would kick in first to pay the medical expenses. If that coverage runs out or if they're seeking further damage and they try to file a lawsuit against you, that's where your liability coverage kicks in to help settle a case. Another term that you're gonna see on your policy, and you're gonna see it a couple times, it's gonna be the word deductible. A deductible is just your out-of-pocket expense in the event of a claim. So there are a lot of different types of deductibles that can occur on a policy, and every place and every insurance company is different. There are some general concepts, but they're all unique in their own way. So I'm gonna break down some of the most common ones that you'll see in most places. The one main one that you'll always see is the letters AOP, and that stands for all other perils. Peril is just a fancy word for what caused the damage. What's the description of the damage? And the reason why it's AOP or all other peril is because you'll see other items listed, and it'll make more sense in just a moment, but you'll see other items listed, and if it's not one of those specifically listed items, everything gets bundled into the AOP deductible. So what are these other specific items I can list? You could have a specific fire deductible, you can have a storm deductible, you can have a wind deductible, and you would think, well, storm and wind, they're the same. Not exactly. If the storm damage is caused by rain where water seeps its way through, storm damage. If it's wind from the same storm where the wind blows a roof off, that's wind damage. So those can get technical. Usually you don't see those separate like that, but just in case, you understand what the differences are. So fire, storm, wind, hurricane. So if it's a named hurricane, you can have a tornado deductible. You can have a theft deductible. You can have a water deductible for anything where it's a plumbing leak or an AC line leak or a refrigerator line leak. It would all fall under a water deductible. You could even have a sinkhole deductible and a slew of other options of things that can come up as possibilities for unique items. The general idea is that when an insurance company knows that there's a specific type of damage that can occur, they usually separate deductibles for that particular item so that either you're more responsible for a type of claim that can be caused by that occurrence, or just to have them separated by line item. Maybe they just see that it's more frequent that someone files a claim of that type, and so they want to hold you to a different level of accountability. Now let's dive into how insurance actually works. So I'm going to paint a hypothetical for you. And oh no, something horrible has happened to your home. And you say, oh no, something horrible has happened to my home. You would then call your insurance company. Let them know what kind of damage you experienced. Whatever it was that happened, tell them about it. The insurance company is going to send what's called a field adjuster out to your property. They're going to go out to the property and look over everything. They're going to look at all the damages. And if there's something that they don't see, it's a great time for you to point out, hey, that's also damaged. Now, word of advice. The field adjuster is not likely to know whether or not you're covered for certain items. So if you have questions about, hey, am I covered for this thing? Or hey, how does this coverage work on the policy? The person who goes out to your home probably doesn't have the answer, and you're best to either contact your agent or contact the insurance company, who is likely going to recommend that you contact your agent. So the field adjuster is just going to go out there and take note of all the damage and take photos of all the damage that they find. They're going to take that information back to the insurance office. They're going to send it back, and another person called a desk adjuster is going to look over that information. When the desk adjuster looks over that information, they're going to plug all the information in, all the damage that's recorded, the cost of the damage being reported, and they're going to determine what the payout should be for your claim. What is the expected cost of what it should take to either repair or replace the items damaged that you're filing your insurance claim for. When that happens, a lot of times it could be somewhere right in range, or maybe it's a little less than or a lot less than what you were hoping for. And you as the homeowner can ask them to go over it. And as you're going out and getting your own estimates from repair people, you can let the insurance companies know that, hey, you're only paying for this amount. These are the estimates I'm receiving. Where is this not lining up? And the insurance companies can review it with you and either choose to increase their payout or keep their feet firm to the ground and say, hey, we're not paying any more than this dollar amount. In which case, that's where you can go further in your legal action from there. But ideally, this is where an agreement is found. This is where a check is cut, and you can either work with the people that you want to work with, or depending on your policy's language in that 80-page document, the insurance companies may already have a company lined up for you to have your repairs taken care of. Now, this is the part where you get to take action. If you're wondering, okay, all this information's great, cool, where's my bottom line? How do I save money on this? What do I do when I'm looking for insurance? Number one, and the best, most effective way is to shop around. There are a lot of insurance companies that offer home insurance. My recommendation, with a lot of bias, is to look for an independent insurance agent, because they're going to have multiple options available as far as what you can do. And depending on your situation, where you may not be a good fit with one company, you could be a great fit with another. And so that is a great option. Looking up a local insurance agent in your area is going to be a great start. There are insurance companies that you cannot get through an independent insurance agent. They only work with their own agents. We call these captive agents or captive insurance companies. So there are a few companies that would be in your area where you can get a policy through them, but no independent insurance agent can get access to that company. So in addition to your local independent, I would also recommend taking a look at, maybe 2 or 3 captive companies that only offer their policies directly through their building, and being able to get quotes through them as well. The second option would be to consider higher deductibles. Now, deductible changing, the higher your deductible, the lower your insurance cost. Or the inverse, the lower your deductible, the higher your insurance cost. It doesn't always make sense to increase deductibles to save money, but if you're getting ready to purchase a home and you need your numbers to fit, it's a great, easy solution. If you're already a homeowner and you're just shopping your rates based on your renewal, or if you're just looking around at pricing, it's a great way to consider, well, if I raise my deductible by this amount, I can save a little bit here. It's a great way to consider it. And one of the things that I recommend that you do when you're doing this, and your agent is a great resource for this, is comparing, if you raise your deductible to save money, how much money do you save? And roughly how many years without having a claim would it take to break even in that savings? So the idea is, if you raise your deductible a certain amount and then it saves you money, but you find out that you would have to go 20 years without a claim in order for that savings to make sense. Like if you had to file a claim anywhere in a 20-year window, you would actually be losing money. it might not be worth your time or savings to consider that change. But if it only took 3 years or 5 years to not have a claim for the break even, it might be something worth considering. If you have a mortgage on your home, it's a good idea to find out if your mortgage company will accept the proposed deductible that your agent has in mind for you. There are limitations with mortgage companies to how high of a deductible you can get. Most insurance agents know what threshold not to go past, but in the event that your mortgage company has special rules, it's good just to check with them to make sure you know what your limits are. Number 3, ask about home discounts. This can be roof replacements, plumbing sensor replacements, window shutters, and other foundational safety upgrades to the home. The roof, especially with this in mind, can be a huge saver when it's been updated with your homeowner's insurance. Number 4, which is kind of like a 3B, which is finding the discounts, but it's also discounts in terms of just safety features. So if you live in a gated or guarded community, you can receive a discount for that. If you have a burglar alarm or a fire alarm, you can receive a discount for that. With the burglar and fire alarm, most insurance companies like to see a monitored alarm system, meaning that you're paying a third party to monitor the status of the home. But few companies are out there that offer what's called local alarm discounts, meaning if you just have an alarm that sounds off or just something that you can monitor yourself, there could be a minor discount available for that. Okay, that's all I have for today. But what insurance questions do you have? Please throw them in the comments below. And if there are any topics that you'd love to hear about, I'd love to hear about it. And again, don't forget to hit that like and that subscribe, and check out the next video that YouTube has lined up for you, because that would be awesome. Okay, bye. And I'm going to do my best to simplify what each of these items is. They typically show up in that order between medical payments and blah, blah, blah.